Help me. How do I get the market forward?
Goody, Tom, on that particular ad. So listen, we as well, we're a bit stunned by some of the market action earlier this year, being a reversal of everything that was bad last year, as you noted. And you've got value, low quality value running on China reopening. And we think that could potentially be a trap, as the China story is a domestic consumption story and not an infrastructure or export story. And on the other hand, and this has been repeated on your program as well, we've got a lot of the growth, and particularly the nonprofit, lower quality growth names running very hot on this expectation that the Fed is done, and we don't think the Fed is done.
What's so important here in wealth management, the rule is you have to participate. How do I participate in the market if I, quote unquote, don't get it?
Sure. Excellent question. So when you look at the kind of arc of the last 30 months or so since COVID, our Wealth Management Investment Committee, led by Mike Wilson, mentioned earlier, and Lisa Shallett, has had some terrific calls, getting very aggressive during COVID, and then warning on inflation, and of course, Mike's call warning on the equity market last year. Now our key conviction, Tom, is getting paid to win. Simply not seeing enough risk premia in the equity market today to be aggressive at an index basis in the equity market. But where are you finally seeing some of those yields? Obviously in fixed income, right? So whether it's high quality investment grade, whether it's munis, whether it's parts of, frankly, dividend paying stocks, we think today, as the economy slows, as earnings reset overall for the overall index, we want to get paid to wait in this environment.
Dan, credit where it's due. You know, I'll always give you that credit. The opening trade, you're really on top of it, ahead of pretty much everyone else. The tactical bullish trade, the bear market rally, the call going in towards year end, great call again. This year's been tougher. I remember some research saying that 3,900 was an easy sell. 100. There's a massive disconnect. This morning, Mike and your colleagues saying this, and this is really punchy, price is about as disconnected from reality as it's been during this bear market. What is it that you're seeing that makes this such a monster disconnect?
I think, Jonathan, a lot of folks are seeing some of the strength in the economy, and they're now asserting no landing or potential reacceleration. And we would say, look, this is an environment where, and we've often been trained over history to recognize that the economy dovetails with the market in tandem in the future. This is an environment, however, where the economy and the market are diverging, right? So or kind of low growth environment, it doesn't necessarily mean it's a bull case for the market. The market has its own set of unique challenges today, and I think this is the disconnect Morgan Stanley is highlighting. Today, when I look at the market, we've got potentially waning liquidity later this year, still ongoing, yet inching closer to the end of the finish line, but we are not done with QT. Secondly, we have earnings that are and thirdly, inflation nosedive appears not to be to 2% anytime soon. Down in this kind of 3-4% level, it's hard to argue that interest rates on the long end are going to go much below 3. And so your new PE math, Jonathan, can't get back to 22 times that we had 2 years ago in a world of sub 2% yield. So I think the disconnect today is people trying to look through, and we're just not there.
What does getting paid to wait look like?
Yeah, excellent question, Lisa, and good morning to you as well. So listen, I think today, and as we've articulated over the last, call it 6 months, moving up a bit in high quality fixed income. So that's been some of the allocation moves that we've made. That much duration to get 4.5, 5 in investment grade, number one. Number two, munis, which were completely left for dead through, I would say, 3/4 of last year, have certainly rebounded. The 10-year peaked out at 4.25. We think lastly, in the dividend-paying stock universe, listen, dividend stocks far market last year. As I alluded to earlier, junk has really run hard this year. You, frankly, tactically, with a very opportunistic time to leg into those quality dividend names.
Priya Misra was on earlier of TD Securities, and she said duration risk is going to look more attractive than both credit and equity risk this year. And she's talking about 10-year Treasury, saying it's time to, as she said, leg into or start buying.
keen for 70 plus, there's some value there, no doubt. But if that continued strength we saw in the job market a few weeks ago continues, I wouldn't be shocked if we see a little bit more upward bias on 10 years. So let's say anywhere between 3.5% and 4% is where we're seeing value there.
Interesting. Dan, wonderful as always, and appreciate the clarity on your calls as always, buddy. Thank you. Dan Skelly there at Morgan Stanley Wealth Management. Always very transparent with their framework, Tom, for how they're thinking about this market.
Well, that's a heritage
and
of
certainly
the firm.
for people less constructive year to date, this has been a tough start to the year.
I think that bears, we've mentioned it many times before, but this was invented by a set of people at Morgan Stanley. I'll give leadership to Stephen Roach in economics, but there's others involved as well. And they don't fight. That's not the right word. They argue constructively at Morgan Stanley like cats and dogs. And it's a really heritage part of their firm.
Mike Wilson used that word disconnect.
Steve Galbraith was involved in that as well.
Lisa Shallett used that word disconnect on this program as well. And you heard Mr. Skelly there talking about the willingness to look through some of this. And this is what Lisa said in the last couple of weeks to us, and here's the quote. Lisa, I don't know how far their crystal but history is not kind to these kind of massive disconnects.
Basically, don't fight the Fed, and when you fight the Fed, it's at your peril. This is what I was wondering about, though, over the weekend. What does it mean to fight the Fed right now? If the Fed is data dependent, that means that some people have a very different call than others, right? It's just basically market pricing. Some people believe that there's going to be a greater disinflationary push than the Morgan Stanleys of the world that do see a potential for a soft landing, but think it's going to take a bit more pain, and that they're already seeing.
This when I entered the building. It's legging in Monday.
Legging in Monday.
We're having
Who else is legging in?
Priya was legging in. TD Securities is legging in. Morgan Stanley's legging in.
Nice.
Quote, legging in is a common practice used to lower overall cost when buying and selling complex strategies involving options and futures contracts. So I guess if you want to buy or sell Apple, that's not legging in or legging out. That's just buy.
Are you legging in?
I don't know. It's a massive jargon alert, I think, for people. I mean, what do you do? Sit around the kitchen table? Oh, with a 201k.
That's what we all do, isn't it? Around the kitchen table, Tom.
Is it dollar cost averaging? Legging in is like with multiple.
I imagine that's what you do around the kitchen table. I can see that. I can see that. Coming up next, Michael Nathanson.
Where do we go with this?
I've got no idea.
I don't know where you go with legging in. It's like massive jargon legging in.
No, I've forgotten. Senior research analyst at SVP.
He watched all the ads.
Story of my
Moffat
life.
Nathanson, next on a Super Bowl.
Keeping you up to date with news from around the world with the First Word News, I'm Leanne Gerrans. Turkey is collecting blood samples to identify the victims of the two earthquakes that struck the country's southeast a week ago. The death toll is now nearing 35,000 people in Turkey and also neighboring Syria. A Turkish business group estimates that the economic losses from the earthquakes could reach $84 billion. Meanwhile, Turkey has widened its investigation into contractors after the collapse of buildings. Now, an internal review at Deutsche Bank found that some employees deliberately circumvented controls to make big profits by mis-selling products. Bloomberg has learned the probe known as Project Teal showed that some employees on a London-based foreign exchange desk sold derivatives to small and medium-sized Spanish companies, even though they knew that the products were too complex for them to use. Citigroup is nearing the sale of its Mexican retail bank, Banamex. The Financial Times reporting the deal could be valued up $1 billion. The owner of Mexico, Herman Laera, is in exclusive talks to purchase the bank. Goldman Sachs CEO David Solomon is reported to have said he should have acted sooner to cut jobs. The FT said he sold a private meeting that the would have when signs of a slowdown began to emerge in the second of last year. Goldman is slashing 6.5% of its headcount, one of the largest rounds of job reductions ever. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans, and this is Bloomberg.
An inspirational talk show.
Is Hong Kong now open for business?
The government is setting aside 30 billion Hong Kong dollars
30 billion
for joint investment with those enterprises if they are interested. It is a change of the laissez-faire policy.
Friday Beyond Spotlights, Friday night at 8:30 on Hong Kong International.